Welcome back. So April 15th, the tax deadline is tomorrow, and with higher tax bills this year, how many are taking profits to pay off those bills, and how many reusing or reinvesting their tax refunds into the stock market? Let's ask Mark Martiak from Premier Wealth Management First Ally. The panel is with us to weigh in on this. So Mark, first of all, how much of a factor is tax-related selling in the market's latest weakness, do you think?
Well, I think that plays into part of it, Kelly. In fact, over the last few weeks, I've carefully looked at my clients' portfolios, as I always do, in a tax-managed approach, in a very efficient way, to see where we could harvest losses and then also take some gains, but at the same time have the money ready, the funds to wire based on the advice and instructions from my clients' accountants.
So in other words, they're just moving the money around? It's not coming out of the market?
Well, it is coming out of the market. In some cases, many clients have significant cash on the sidelines. I'm working mostly with high net worth and ultra high net worth clients. So in some cases, they're moving money from cash that hasn't been invested. In other cases, we're selling and began selling at the earlier part of April when we had a better feel from the accountants as to what our clients needed to owe IRS and
Robert,
their state.
Yeah, we had some guests last week suggesting they think the market's going to rally on April 16th as soon as this is all past us. Do you buy that?
Not really. You know, it's interesting. I was very skeptical of this whole explanation that the markets would turn down because people were selling their stocks to pay their taxes. But I've started to speak to a lot of advisors like Mark, and I think he's right. A lot of people, we always surprised at how little liquidity the wealthy actually have. A lot of it's in assets that they want to grow. And number two, you have a double whammy on the tax front. You have those higher tax rates, which seem like a long time ago, but they're just coming to effect right now. Plus, all of those great capital gains from last year's 30% market increase, they'll have to pay those in April as opposed to being deducted last year. So you've got, a lot of the wealthy that I'm talking to are suddenly looking at their tax bill today and over the weekend saying, oh, wow.
They wait till the very last minute?
Absolutely. It's the value of money, right?
Yeah.
Time and money. So they're just looking at it over the weekend and saying, I'd rather not give cash. I want to save that on the sidelines in case we have a big turn down in markets. So I'd rather take some out of already an iffy stock market.
Anthony, what say you?
Well, there's definitely some of that. I think most of the tax stuff happens at the end of the year, planning into the next year.
Right.
But I think that the bigger issue is not the tax and it driving the sales, but it's the overall tax and the dampening effect that those taxes have on the economy. And let's just face it, taxes are a price. When they go up, it slows people's demand down. It's just that simple.
That could have been maybe part of the first quarter, but certainly it seems like the latest data point towards strength. And that's what we were talking about right off the top, right? Is that the economic data is looking a little bit better lately.
I do think the taxes are helping the deficit, though. So
massively.
There's a trade-off on both. So
Mark,
I'm not here as a tax activist.
No, I'm just curious, Elon.
Yeah, Mark, I have a question for you about one issue that's very big in Washington right now, which is paying for the Affordable Care Act and the Medicare surtax that went into effect for the 2013 tax season. Is that an issue for your clients at all, and how are you seeing that impacting the way folks are planning to pay their taxes this year?
Well, it's been a topic of conversation ever since we knew that they'd be paying for that. But clearly it's not an issue. The bigger issue is that they're paying more taxes at this time of the year than they have in recent years, and they're beginning to become even more concerned. Until they see the money leaving the account, they're really not as vocal as they are. It's all theory, but once that money starts to get wired out of the account and they hear from their accountants directly from them or through me, then it's a big surprise. Then there's a lot of discussion, and then Obamacare and everything else that's related to their higher tax bracket starts to come into conversation.
I mean, just keep in mind, for the top 1%, they're seeing $40,000 more paid for taxes this year on average than they paid last year.
Robert,
that's a lot of money.
But $40,000 to the 1% is like not even, I mean, how many decimal places do you have to
Kelly,
somebody's entire
money
salary.
matters to these people, right?
Kelly, it's a lot of money to Shaquille O'Neal.
Yeah. No, look, he draws inner wealth. Dr. J?
And Kel, it's a lot like this, at least for our clients, and that is we saw the Bulls and Bears fight to a draw going into the end of March. And they basically have that 2-week period up until, last Friday, really, to get the money ready so that they can wire it out or put the check attached to the IRS. Because we, of course, despite filing for an extension, you owe the money now. So the fact that they fought to a draw, Bulls and Bears, now they owe the taxes, we thought could have some impact. Not significant, but given that the market was hitting bids and
Right.
people were getting
Yes.
out, people were forced to basically accelerate the selling to get out and to go to cash so that they'd have the money for taxes. We thought that was a contributing factor, not the reason we rolled over,
But a contributing factor.
But to emphasize John's point, the people that have capital, frankly, are the wealthy. When you look at the top 1%, this is according to the National Taxpayers Union, the top 1% is paying 36% of the income taxes in the United States.
And that's going to keep going up.
And that's going to go up, and it's going to have an impact on the stock market. It has to.
And their psychology.
Because a lot of that taxing is capital gains taxing.
But what
right.
about research? I think that, Robert, you wrote a story about this that shows that the more money people make, the actually more willing they are to pay more in taxes.
Yes, but
they're
basically
willing to shell
even those.
out for
But, no, but
Was
the
that
point
from the Obama administration?
That was from an actual. It was
We
from a
call it a
nonpartisan
Kristen Bell
survey.
indicator.
But the reality check there is that everybody wants a tax rate that's lower than what they currently pay. So
Quick
even
last
those
word,
most willing
Mark,
want to lower taxes.
what do you think happens April 16th?
Well, I think that the market continues to climb higher, to be perfectly honest with you. Once my clients, and I know a lot of investors, get used to the fact that that the money is gone and they are living with this reality in a higher tax environment, we get back to doing what we do best, and that's making money for our clients.
Yeah, in other words, the loss drives them to make a bigger profit, and that's interesting.
That's exactly right. It's behavioral, and John makes a good point too. That money has to be earmarked for tomorrow. If it's not, you start paying interest, and clients, affluent clients, any clients, don't want to pay interest or penalties later in the year. And let's not forget, they're also making estimated quarterly tax payments for 2014 starting now.
Yeah. Thank you, Mark.
Thank you, Kelly.
Fascinating.